It is great practice to dive into some technical analysis charts, so let's do just that. It's a great example to chart out and map out your indexes like the S&P 500 or the QQQ because most individual stocks will follow those big indexes. So if the QQQ is down, the technology stocks will go down with them, hypothetically. So it's good to see support and resistance on these big index stocks because your individuals could potentially follow those during that same exact time frame. So looking at this QQQ chart, we can see that there is a pretty decent support on the 598, almost 599 level. It was a top of a gap, so you can see there was a gap and it bounced off of this very, very nicely. This is the hourly chart, so you can see on that 1 hour that it did touch it. It bounced off of it and closed extremely bullish candle. But now it is obviously coming back down, and we can also see that same 606.40 resistance level. It was a double top, so twice in the same back-to-back hours rejected this exact same level. So we could see it come back down to the 598.84 level, and that's when we will actually react. The thing about the stock market is you don't want to predict, you want to react. So if the QQQ breaks below this 598.84, it's most likely going to go down to the 595.32 level. And if it breaks that, it's going to go down to the 593.17 level. And if it keeps going down, your individuals will also go down. Your AMD, your Nvidia, your Tesla, your Apple, your Amazon, etc. Those will go down with the QQQ. Obviously, a resistance that we want to break up top is this zone from 616 to 617.50. We want it to recover and we want it to break above this zone, these levels, because if it does, obviously the individuals will follow. So you will see these individuals have a 5-10% push up. Again, the AMDs, the Nvidias, the Teslas, you can see those start going back up and trying to break their all-time highs, start an uptrend. That's what we want. Individuals follow indexes.